Hi and welcome to ECCB Connects. This week we look at the ECCB's role as banker to governments and commercial banks. Stay with us, we'll be right back.
It's coming, the new family of EC polymer notes.
What is different about these notes?
The feel.
Polymer notes are made from a thin plastic film which makes the notes feel smoother than the paper notes.
The orientation.
The notes have a portrait orientation. You will read the notes from top to bottom instead of left to right as you do with the paper notes.
Unique tactile feature.
The front of each note has raised bumps at the top left-hand corner. These bumps form shapes that are familiar to you.
Holographic foil strip.
This feature is on the $20, $50, and $100. When you tilt the notes, the images and colors in this section will change.
New image on the $50.
The back of the $50 bears the image of former governor of the ECCB, the late Honorable Sir K. Dwight Venner.
New signature.
All the notes bear the signature of the current governor, Timothy N.J. Antoine.
EC polymer notes. Cleaner, safer, stronger.
Deputy Governor, welcome again to ECCB Connects.
Thank you, Shimalon. It's nice to be here.
DG, we often receive email messages from the public about they're inquiring about opening an account at the ECCB. But we know that that's not within our forte. That's not what we do. We are banker to governments and banker to commercial banks. Explain, what does this mean?
We are not in the commercial banking business, so we do not give loans or take deposits from the public. We are bankers to governments and bankers to financial institutions that we regulate and supervise. So that is covered in parts 8 and 9 of the ECCB agreement. So in part 8, we speak about as being banker to financial institutions. And as the banker to financial institution, the financial institutions, the banks that we regulate, as I indicated, are allowed to open accounts here. So they are deposit accounts that they have here with us, and they use these accounts to facilitate transactions, mostly international transactions, and we facilitate that for them. In addition to that, the banks have to put aside a 6% of demand deposits as a reserve. So we hold these demand deposits on account for these banks, and it is from these accounts that transactions are normally undertaken on behalf of the banks.
Before you go on, you mentioned demand deposits. Explain that, please.
Well, that's the demand deposits essentially are the regular deposits that we know of in the banking sector, right? So if the bank holds $100, say, 6% of that they're required to keep here at the central bank.
And that's the deposit from the regular customers.
That's deposits from the regular customers, okay? So in doing so, they build up a reserve with the central bank. The reserve would have been, as on Friday, I believe, about $1.7, $1.8 billion. And that is increasing because deposits are increasing in the banking sector. So we hold 6% of that on behalf of the banks. They are, by law, required to keep that amount with us and then use these deposits to facilitate transactions, but they must always top it up because it's calculated on a 4-week average. And so when they're below that 4-week average, then they're supposed to top it up by topping up their reserve account. The other thing that we do for banks is that from time to time, banks may be in a situation where they need liquidity. So we can lend them funds, not from their reserves, but from our own resources to help to bolster their liquidity. So it's a loan, what we call a Lombard facility, and it's subject to interest rates. It's 6% and 6.5% at this point in time. And the banks can come to us and get a short-term credit arrangement, usually up to 90 days, for meeting their liquidity needs if they need to. These days, because as I indicated, the liquidity reserves the liquidity in banks is very high, and therefore the banks are not coming to us to borrow money, right? So they've saved that cost, but they do have to put aside the 6% reserve with us. We are also banker to governments. So the ECCB is owned by our governments, and therefore we are their bankers. And similarly, like with banks, we hold accounts on behalf of our governments. There might be overdrafts, there might be demand accounts, there might be accounts that the governments rather, will want to hold for specific purposes. So some of our governments have accounts they have to meet international commitments. For instance, if they have to pay resources to, let's say, the IMF, let's say they went through an IMF program and they have to repay certain amounts to the IMF, then we will hold these accounts for them. If they want to establish sinking funds to meet a particular objective, we will set up these sinking funds. And when these funds come in, we will invest those funds on the behalf of the governments. They get a little return on those funds, and these are compiled within the accounts, the different accounts that the governments have. Now, we also do have a credit allocation arrangement. So each government is allocated from our resources a certain amount of credit that they can borrow and use to meet their day-to-day commitments. The credit allocation is based on an average of 3 years of their revenue. So every year we do a calculation, average the revenue that is earned by the governments, whether it's tax revenue, particularly tax revenue by and large, and do an average of that over the 3 years, and then an allocation was made with respect to how much governments can borrow. So in other central banks, there is almost what you may call a limitless borrowing from the central bank. We don't have that. We have that particular safety net that says that we give you a limit and you can only borrow up to that limit. If you have exceeded that limit, then you can't come to us for any other borrowing.
So it really forces the governments to manage their finances properly.
Indeed. So some governments will borrow, as I indicated, to meet their day-to-day commitments. If they have loans to repay, let's say to the CDB or whomever, international bodies, then they will utilize their credit in order to do so. If they need money for paying salaries and they don't have sufficient in the treasury to pay salaries, they can come to us, borrow, and then we will lend it to them, and they can pay salaries or any other commitment that the government has an obligation to really pursue. And so that in that way, we act as a lender to the government.
And a sort of buffer.
As you know, as time during the course of a year, things will not go smoothly as the governments had planned. There will be some drains on the fiscal resources, on the cash flow, and so we are here to help them out to supplement the cash flow, but within those limits, as I indicated.
With respect to the ECCB's strategic priority goal 3, says that the ECCB serves as advisor of choice to its member governments in pursuit of fiscal and debt sustainability. And there are a number of indicators for this, but we look at 2, one of them being the debt management and the functioning of the regional government securities market. So in terms of the debt management, I know a target has been set for member governments to reach a target of debt to GDP of 60%. How is the ECCB facilitating or assisting with this?
The management of debt and the RGSM, they are related, right? Because RGSM facilitates government borrowings, whether it is by bonds or by treasury bills. So it is a feature in terms of managing debt. But overall, debt management has to be seen within the context of government's fiscal responsibilities. So governments will borrow from time to time. There's no government that can live without borrowing. and whether it is by issue of treasury bills, because if there's an issue of treasury bills, that's a form of borrowing. And if it's done on the RGSM, that's a form of borrowing, right? One or two of our countries do over-the-counter issues of treasury bills, but that's borrowing.
And it's not necessarily a bad thing.
It's not necessarily a bad thing. What we are promoting is the use of the RGSM because it opens up the number of persons who may participate in that borrowing mechanism to the ECCU-wide country. So anybody on the RGSM, anybody in the ECCU can subscribe to a treasury bill. So if it is done over the counter, it's only for the citizens of that particular country, right? So that's the benefit of the RGSM because it widens participation. So in terms of debt management per se, we recall that we had a debt management advisory services for a period of time that was funded by the government of Canada. That has come to an end. But the experience that we gained through that particular initiative has helped us to continue providing good advice to governments on how they should manage their debt using different features of debt management. So we recently have done a paper on one of our member territories to see whether it is possible for the government to use the RGSM to issue treasury bills as a form of borrowing, right? So we are discussing that with the authorities in that particular member territory at this time.
Because not all of the 8 member countries
Not all of our 8 member countries are on the RGSM. What we find is that all our independent countries, for the most part, are on, so 6 of our countries of the 8 are, for the most part, on the RGSM, right? But we do things like tools, DEMPA. We do these tools that enable us for the governments to monitor the debt contraction, recording of debt. Right now we are into a new product that has been written by the Commonwealth Secretariat that allows for wider debt management. So we participate in giving that kind of advice to our governments because the advice that we give is based on our experience with international bodies, and we participate in a lot of fora for debt management, and we give that advice to the governments because we think that is useful for them to be guided by international standards and principles. As I indicated, governments borrow all the time, right? Citizens borrow all the time, but within their means. So what we're trying to do is to alert governments, yes, you can borrow. If you need to build a road, for instance, there might be a school, you may need to borrow in order to get that project completed, but you borrow within your means, your fiscal circumstances. So our target of 60% of debt to GDP by 2030 will be something that we need to continue to pursue. On average, our debt is within that range. Some are a little higher than others, and our task is to see how we can encourage our governments to lower the debt to GDP ratio, okay? So in terms of that formula, so it's two components, your level of debt and your GDP, all right? So your GDP, if your GDP is rising, then and your debt is not rising as much, it means the ratio will lower, right? If your GDP is not rising, but your debt is rising, so the rate will be higher, right? So it's a two-pronged effect, what we do in terms of that kind of advice. How do you grow your GDP? That's one. And how do you temper your borrowing proclivities, if I want to put it that way?
Keep your debt under control.
Keep your debt under control, right? Because if your debt is not under control, quite honestly, our citizens face the prospect of paying for that debt many, many years down the road. And we just have to look at examples within the Caribbean and where debt has escalated and growth has not, where governments now have to approach serious management of their debt by asking for forgiveness, by going into the international market. All of these things are a result of keeping your debt within manageable levels.
So the message is really the same, because when we do our savings and investment courses and our other programs we have done looking at financial management, we say to the ordinary citizen, budget and keep your debt under control. Same thing, same message for the governments.
Indeed. Now governments will do their budgets, right, as you know, and will go to Parliament and ask for these budgets to be passed, right? So these budgets have certain projections, certain capital projections, capital programs that they will want to undertake, recurrent programs that they will want to undertake, that is recurrent in meeting their salaries of public servants, for instance, goods and services acquisition, maintenance of public assets. All of these things fall under the recurrent budget. Then the borrowing for capital would be for building of roads, building of schools, what have you, all of these, nice things that all citizens want, right, in their communities. The government will pass a budget with respect to how these are funded. Now, the trick is making sure that you keep your budget in line with your expectations. Sometimes, like you and I, we may feel that we can overspend, right? And we get into more debt because some of us try to spend more than we earn. And so we get into trouble by doing so. So the government can do the same thing, spend more than it earns, and then debt accumulates.
But the people pay.
But the
people
pay.
And generation after generation.
Right, precisely. So this is how we want to give thoughtful and influential advice, that in the contraction of debt, in the management of your fiscal, that we see that there are ways and means that we do so as to keep it on an even keel, so that a country does not get into too much trouble when it over-contracts and overspends and raises funding through debt.
As we wrap up, the ECCB, its key function really is the issue and management and maintaining the stability of the EC dollar. How does this issue of governments controlling their debts, how is that linked to the stability of the EC dollar?
Some debt is contracted internationally. It has to be paid back to these international borrowers. And usually, we don't lend in EC dollars, or we don't borrow rather in EC dollars, and they don't lend us in EC dollars. So it has to be some form of foreign currency, whether it's US, whether it's Euro, whether it is the Japanese yen, or what have you. So we contract debt, international debt, by borrowing on the international market and utilizing international currencies. That helps in a way because then it boosts our reserves. Mm-hmm. Because as we get these international currencies into the system, it boosts our reserves. But when we have to pay back,
yes,
right? So when we have to pay back now, we must utilize these international currencies to repay. And so if it is that we are utilizing more of our resources, into our foreign reserves, so to speak, to repay these loans, then it's a drawdown on our foreign currency reserves.
Right. Which backs the EC dollar.
Which backs the EC dollar. So we may contract for, let's say, a long-term project, which may have a 10 to 15-year span, and we are repaying over that similar period of time. So we borrow the money, it comes in, right? We spend it to do whatever the project is required, how much is required for that project, and then we have to repay. So assume that we do not get any more reserves, and we do not get any more borrowing to bolster our reserves when we contract that debt. Then as we are paying, we have to then utilize our foreign currency reserves to repay.
Yes.
And if we do that and there's no build-up, it can have an effect on the reserves that we have, and therefore potentially can affect the backing of our currency. Now, we don't want to see our currency not being backed. That is the most stable thing that we have in our region. Okay, so we want to make sure that we do all that we can as a central bank to allow for the maintenance of this critical matter with respect to the backing of our currency. So if we are going to be utilizing foreign currency to repay our loans, we must be able to do so in a reasonable manner. Therefore, we must be able to say that we are contracting debt that we can repay.
Yes. So, proper management of debt, stable EC dollar.
They go hand in hand.
DG, thank you very much for speaking with
You're
us.
welcome,
on
Shubhala.
ECCB
Thanks.
To view any episode of ECCB Connects anytime, any place, at your convenience, check us out on YouTube, Facebook, and LinkedIn at ECCB Connects.
Here's where we end this week's episode of ECCB Connects. The ECCB launched its new family of EC Polymer notes earlier today. Join us next week when we'll bring you highlights from the launch. Thanks for watching.